is the 28th of January. This is Brad Matheny. I just got done taking some time to draw out the bars, carrying forward over the next 2 or 3 weeks out in here into this base rally pattern and crush pattern. So I'm back to drawing what I think is likely going to happen. Took a little break here the last week or so. Just wanted you guys to realize, the kind of services I'm providing in these videos, and remind you to, kind of pay attention to what's going on. So this little rally phase here, before the crush pattern and the evening star, island, gap defender, base rally, that sets up a pretty interesting kind of a roll. This is the rally phase into the inverted rally, the counter trend rally, breaking down into our deep V pattern. So, I've kind of highlighted the potential for the deep V pattern moving like this into that 20th time frame back over here, maybe a bit lower. And it looks like, we're going to have a little bit of rotation right in this area, probably between 590 and maybe 595, 596 for the next couple of days. We've left this big gap window open up here, which is going to get filled at some point, maybe much later, maybe sometime in late February or March. But at this point, we're going to come probably down and fill this gap. Not again, this is Tuesday, Wednesday, Thursday, potentially Friday. Friday is a gap potential pattern. I believe that's in trending mode, which will be to the downside. Oops. And I believe that we're looking at, pretty much if I were to redraw these levels, I would be expecting this as price action, rolling down, rolling up, rolling down, rolling up, rolling down, gapping down, rolling sideways, rolling down, and then rolling into another deeper pattern back over here. And that would be my estimate with regards to what we can expect price wise. So we're going to go through a period of time here, possibly 1 or 2 more days, which are going to be, essentially a temporary bottom, a gap reversal, and a top. Then we move into that gap potential on the 31st, end of the month. In my opinion, that gap potential is likely to gap downward, as I see that we need to break down into this lower trend. And I believe we're really going to try to, through that gapping pattern, either set up another gap here or trade right below it. And then we move into the sideways consolidation before we finally break down into that deep V pattern near February 9th or 10th. Now, understand that this is pretty much right in line with what I've been telling you all along. I'm just giving you a very clear breakdown of what I think is likely going to happen. And like I said, whether we gap here below this window or stay within this window, we will likely fill that gap window right here, stall back out, hit this low. So this low is the next major move, but you got to kind of time what's happening here. You're going to get a little meltdown probably today, setting up the bottom, and then you're going to get a little meltdown maybe tomorrow. Then you're going to get a temporary top up here, which is a move up and then rolling downward, then likely into a big breaking gap pattern here, downward movement down here, a bit of recovery over here and here. That's the 4th and 5th of February. And then we move into a fairly sharp downward trend into that 9th, 10th bottom. And that 10th bottom is really quite clear with this evening star. I mean, it's going to be an interesting V-shaped island type of a move. And again, this is a star pattern. This is a gapping pattern. An evening star typically would be a upper gap but it's likely going to be a very big gapping pattern. Like we get a bar and then we get a gap move up here and then we roll down. That's a true evening pattern like that. Now I want you to invert this. So what we would be looking at here is, well, I'll do it over here, would be some sort of a pause, a gap move, and then some sort of a reversal back the following day. So that's what we're looking at back over here with this gap reversal, with this evening star formation. Even though it's labeled an evening star, it's really going to be more in this shape, which is a morning star. And that's why I think we're going to have this gap down move on some news. We're going to see how it plays out. Then remember, we have the secondary gap back over here. I'm going to go way back here because I keep creating data. We have that secondary gap back over here, that major bottom on the 21st. Okay, and that's right over here. So I think we roll into this sideways move, and then we set up another bottom back over here. And, that's going to be our secondary bottom, possibly a bit lower back over here. Okay. So looks like it's going to be pretty interesting. Looks like it's going to melt down a little bit. Try to come down into this 575, maybe 567, 565 area in the secondary bottom. I'm still pretty confident that this 575, 577 area is really going to be our bottom, our base. We've gotten there before. We were just there 8, 9, 10 days ago. And it would make sense that we would come down here, try to set up a double bottom off of this low, and then try to see if we can hold or reject that low back over here. So cautiously, little bit of a meltdown sideways for the next 2 or 3 days, setting up Thursday night, Thursday afternoon, prep for a potential breakdown into Friday, then a carryover breakdown into Monday, then likely a little consolidation into Tuesday, Wednesday, and then a bigger breakdown that's going to put us into the holiday, the 9th, 10th, 11th, that deep V, not holiday, but that deep V pattern. And again, kind of looking for that deep V pattern over here, looking for that buy hedge on a little bit of a recovery. You really get that buy zone between this time frame and this time frame. So understand that, we're going to be setting up what is likely going to be kind of a double bottom right in this area, rolling through this area and then through this area, moving into that rally phase. Okay. So when you come right down to it, you've got kind of a double buy zone right in here, up into a rally that's probably going to put us up in the 597, 600 area into early March before we roll into the next topping pattern. Okay, so now QQQ today should be consolidating, big gap down. You can see how I've drawn all these the other day or yesterday. I'm going to get rid of them, get rid of this. This is our big breakdown. What we're looking at here is a big breakdown and basically consolidation again. If I were to tell you what I think is going to happen is you're going to get temporary bottom, rolling up, sideways, breaking down, rolling up, moving down into that deep V. Do it again. Got to be cautious of these dates. Breaking down, rolling up into that deep V pattern here, and potentially rolling back down into a secondary low here and then trying to move out of it. So, you've got a pretty clean rolling breakdown trend. This is end of this week breakdown, end of the week, like that would be the 6th, 7th, 8th breakdown into this 10th low. It could start here in the QQQ and the NASDAQ and technology sector. And like I said, this is a double bottoming type of setup. So you can see we're selling through here. We should be looking for kind of a double bottoming type of a pattern here and possibly here before we move upward. And that gives us a pretty solid area to look for this kind of a double bottom right over in this area, probably again down around the 491, 490 to 493 area, let's call it. Maybe a little higher, but right in this area, 490, 493. I'll get rid of this and this, and I'll leave that for now. Come back over here, highlight this 490 to 493 area. And I would say that would be a decent support level. Looking at this data, now remember, I draw a bunch of things on my chart, and you guys can, like it or not like it. The whole point behind drawing, and I tell people this all the time, is, do you do you, draw what you draw, see what you see. It's not about trying to make other people pleased with what you have on your chart. The whole idea here is to try to get you to understand what is coming and what you actually see in the chart. So that's why I just draw what I see and go from there. Okay, so now what we're going to do is leave it here and move on to the gold and silver data. Now, gold and silver are consolidating. You can see here, silver is kind of moving into kind of a flagging formation coming across here. We'll see how this plays out. Or here you could say, we could get another breakdown. The gold and silver cycle patterns are indicating a top pattern today, flat down, harami inside, temporary bottom, then a big crush pattern on the third. We're still in bullish trending. We finally get to a momentum rally back over here on the 5th. That's right before the big rally phase. So what we're kind of looking at here is if you consider the top pattern today, we should see some upward movement, flat down, harami. These are pretty much the same, sideways, temporary bottom, moving into a crush pattern, flat down, and then a momentum rally. If I were to look at the next couple of days and say, what do I expect? I would pretty much say that we're going to kind of roll right in this area, maybe get a bit of a crush and then start to rally back out of it for silver. And again, the same kind of thing over here for gold. I'd like to be able to tell you that, hey, we're going to be ripping higher because I think that's what we should be doing. But in reality, we're going to kind of roll and then start to rip higher. So that's kind of where we're at. We're going to get this rolling sideways trend here, especially with, every morning I wake up and there's more news about Trump issuing an executive order or whatever. The current one is to halt all essentially non-essential government spending related to bills that Congress has passed. Essentially, he's trying to, um, you know, basically review excess spending. These big omnibus bills are creating an issue. They have for many years. When you write a bill that's 9 or 10 or 11,000 pages and has hundreds of little expenditures out there or thousands, it's not really a bill. It's a big just wish list is all it is. I think what he's trying to do is curtail some of that, bring it all back. And like I said, I think it's going to cause some disruption in the markets, particularly in gold and silver over the next 4 or 5 days. So remember, we're looking at moving into that early February timeframe for gold to be able to make a move. And same thing I highlighted over here, silver. So we kind of need to get over here into this early February timeline. Okay, that's January, that's February. This is February, roughly right over here. We need to get into that early February timeline, late January, early February, I believe, for gold to really start to make a move. Until then, I think it's going to be really choppy. And that we'll see how it plays out. But, I don't think gold and silver are going to make any big moves. Doesn't look like it based on my data. Okay, now we come back over here to Bitcoin. Drag this back over here so I can get to Bitcoin. Bitcoin is up $461. We are rolling through a sideways consolidated phase. Now, I always end up back here in a 1 hour or 2 hour chart because that gives me more clarity. We had this potential breakdown here, which I highlighted. I'll get rid of it because I want you to be aware of where we're at, so to say. And you can see that we have consolidated for many weeks, literally many weeks off of this high, continued to run off that high and this initial low that we set back over here, which was originally set back over here. So we can hypothetically drag this back and we can drag that back. And so now understand that we're still in this excess phase peak pattern and we are attempting to break downward. We flagged out over here, broke down, okay? We have this excess phase peak here off of this high that continued off into this flag, finally broke down a little bit below these lows and consolidated here. I think we're looking at another, like I said, breakdown into the end of January. So if I were to reconstruct these levels, this breakdown across this apex, retesting this low, I believe that we're going to be moving like this into this area, coming down into the end of January. Actually, let me do it a little differently because we got that February 9th, 10th base bottom over here. Yep, there we go. So we're probably going to be rolling into this area, maybe a little higher, and then break down into the deep V and try to come back out. And I think this is going to be the consolidation phase. I've drawn it. So here we have the consolidation phase. I think that consolidation phase, that breakdown of this low, remember, we've got this flagging. We've got this low pattern here, essentially running right across there. This breakdown is going to occur really more so right in this area around the beginning of February, where we're going to roll down into consolidation and then break down into that deep ultimate low, which is going to set up the base bottom for us to move out of. And that makes a lot of sense to me. So, and you can see how this is going to end up being support. And then you can see here, we've got this channeling down here, acting as support as well. That's a very long term. Let's go back to daily. That is a very long term channel carrying all the way up from this base in 2023. We're coming right down into that level. So, when you look at where we're going to pull down into on this blue line, let me mark this a little different, but it's going to move right down into that middle level. So here you go. 80,000 becomes roughly the next major target, which is a 50% pullback. And it's going to probably set up right here between the 10th. And remember, the secondary bottom sets up right over in this area before we try to move out. So you've got the two bottoms, February 10th and February 21st, 22nd. I believe that's going to be a good solid basing level here, maybe a little lower down into this area, down into the 73,000 area. But we are going to see. In fact, I'll mark that on the chart here. So 73,200. And I think this is a pretty good explanation of what price will likely do. And remember, when I do this, when I look at all this, I try to put this together for you guys. Really, what I'm doing here, guys, is I'm basically looking at, Fibonacci levels, historical rotation, what is likely to happen based on my knowledge, based on the patterns that I see, and pretty much everything that I draw is, relative to Fibonacci levels, Fibonacci retracement levels. So, I'm not, and that's the way my eye works. We're not really moving out of any type of real structure. As I showed you earlier, I can draw blocks over here and say, look, so here's the move basically from this area down here, these lows. Let me find it, from basically these lows up into here. That's the entire move, the actual most recent move. This is the 50% area. So let me make this a bluish color. So here's the 50% area of that move. Okay, here's basically the top quarter of the move, which is the upper range. So I can take this upper range and say, okay, that's roughly the upper range that we've set. I can then copy that and move that down here to this secondary range. And look, that tells me about where the low is going to be right here. And you can see it's all basically, Fibonacci levels. It's all based on range. So this is a 100% measured move. A 50% move would essentially be down into this area, right about here. A 382 move would be right about here. And a 618 would be right about here. So again, those become projected target areas. We have the 50% area here. And we look over here to see this rolling move down here. 618 area move would be roughly right in this area, right below my 73,200 area. And again, so you can see it's all based on real Fibonacci price structure. And all I'm really doing here, guys, is, visually drawing what I'm showing you in the chart. This was a failed breakout. We never got this breakout, so we can get rid of it. It has not happened. We're actually moving into a breakdown. Today, I would suggest that Bitcoin, this is a daily chart, is going to consolidate. Like I told you, we are going to be basically rolling into sideways trending here. We're going to be rolling into sideways trending, then breaking down, and then potentially breaking down further. So, the look here is going to be rolling sideways for 2 or 3 days. Then around the end of the month, we might break down into this 91, 92,000 area, then consolidate a bit, and then break down even further. So, basically Bitcoin's going to go nowhere for 2 or 3 or 4 days until the end of the month. That'll be this weekend. Okay, guys, that's it. Let's go ahead and try to get some today. Dollars moving downward, which is good. Should put some pressure into metals. But again, metals are a little under pressure right now, panicking with what the market is doing, especially after this big roll down yesterday. I think the markets are a bit in shock, and they're probably going to stay relatively calm somewhere between this 590 and 595 area. I really think it's going to be relatively calm the next 1 or 2, maybe 3 days until we get into Friday's breakdown where I think we could see a pretty big move down here into like 585, 584 maybe. And we'll go from there. Okay, guys, good luck. Get some today, and I'll talk to you soon.